You use it every single day. You work for it, stress about it, and dream about it. But have you ever stopped to ask where money actually comes from? Most people assume there's a giant vault somewhere, stacked floor to ceiling with cash, and that every dollar you own is backed by it. The real answer is far stranger, and once you see it, you can never unsee how the whole system works. Here's the surprising truth. Almost all the money in your country was created out of nothing, mostly by typing numbers into a computer. In fact, only a tiny slice of all the money out there actually exists as physical notes and coins you can hold. In most modern economies, physical cash is only around 5 to 10% of the total money supply. The rest is just digital records. So if money isn't a pile of gold in a vault, what gives it value? To answer that, we have to start at the very top. At the center of every modern economy sits a central bank. In America, it's the Federal Reserve. Think of it as the bank for the banks. The central bank has a power almost nobody else has. It can create brand new money whenever it chooses, simply by deciding to. But it doesn't run a printing press for paper. Most of the time, it just adds numbers to the accounts that banks hold with it. This special money is called reserves. It's the base layer of the whole system, the money that banks use to settle up with each other. When the central bank wants more money flowing, it creates reserves and buys assets like government bonds from banks. When it wants less money flowing, it does the reverse, selling assets and pulling reserves back out of the system. During the 2020 crisis, the Federal Reserve created trillions in new reserves in a matter of months to keep the economy afloat. So the central bank makes the base money. But here's the part that genuinely surprises people. It's not the main place your money comes from. Most of the money in your everyday life, the balance in your checking account, was created by ordinary commercial banks. And they create it in the most ordinary way imaginable. Every time a bank makes a loan, here's the idea that breaks most people's brains. Banks do not lend out money that savers deposited. Loans create deposits, not the other way around. Imagine you walk into a bank and get approved for a $10,000 loan. Watch what actually happens next. The bank doesn't reach into a drawer of someone else's savings. It simply types $10,000 into your account. That money is brand new. At that exact moment, the money supply of the entire country just grew. New money was created by the act of lending itself. This isn't a conspiracy theory. It's plainly described in publications from central banks like the Bank of England. So if banks can just type new money into existence, why don't they create infinite money and make everyone a billionaire? Because there are real limits, and understanding them is the key to understanding the whole system. The first limit is repayment. When you pay a loan back, that money is destroyed. The deposit the bank created shrinks back down as you repay. Money is created and uncreated constantly. The second limit is risk. A bank only profits if the loan gets paid back. Lend to people who can't repay and the bank takes the loss. The third limit is regulation. Banks must hold capital, a cushion of their own money, against the loans they make. They can't lend without limit. And the fourth limit ties it all back to the top. Banks still need those central bank reserves to settle payments between each other. The central bank controls the price of those reserves through interest rates, raise rates, and borrowing gets expensive, so less new money is created. Lower rates and borrowing gets cheap, loans flow freely, and new money pours into the economy. That dial is one of the most powerful levers on earth. So now you can see the layers. The central bank creates base money. Commercial banks create most of the rest by lending. Together, they steer the whole economy. But this raises the deepest question of all. If money is just numbers created out of nothing, why does it have any value at all? For most of history, the answer was gold. Paper money was a claim ticket you could swap for real metal sitting in a vault. But gold is heavy, limited, and slow. So in 1971, America cut the final link between the dollar and gold for good. From that day on, the dollar became what we call fiat money. Money that has value not because of gold, but because we collectively agree it does. That word, fiat, simply means by decree. Its value rests on trust. Trust that others will accept it and that the government stands behind it. And there's one more anchor you might not expect. You must pay your taxes in dollars. That alone forces everyone to want them. So fiat money isn't backed by nothing. It's backed by an entire economy, the law, and the shared belief that holds it all together. But that belief is fragile. If a central bank creates far too much money too fast, trust can crack and prices can spiral upward. History has brutal examples. When money is printed recklessly, you get hyperinflation, where a loaf of bread can cost a wheelbarrow of cash. That's the tightrope every central bank walks. Create enough money to keep the economy growing, but never so much that trust collapses. So why does any of this matter for you? Sitting there with your paycheck and your bills? Because it changes how you see every dollar. First, When money grows faster than the goods an economy produces, each dollar buys a little less. That's where inflation quietly comes from. Second, those interest rates you hear about in the news directly control how much new money gets created, which moves your rent, your loans, and your savings. Third, holding only cash means slowly losing ground because the money supply almost always grows over time. Sitting still is a quiet cost. You don't have to be a victim of the machine once you understand it. You just have to position yourself on the right side of how money moves. Money isn't a fixed pile of gold. It's a living system of trust created by lending, steered by central banks, and ultimately powered by all of us. That is exactly what we do here. We hand you the cheat sheet to the money machine. This is Brainonomics.